Executive English, polite but firm term sheet phrases. Welcome! Today we'll sharpen the language you use in term sheet negotiations. Your goal is simple. Be polite, yet firm. That means protecting your valuation and control terms while sounding collaborative. Use win-win language that shows you want a fair deal, not a fight. Avoid vague phrases like, "we'll see," or "sounds fine," which invite scope creep. Instead, speak clearly about what works and what doesn't. Think respectful tone, precise numbers, and objective reasons. When your words are concise and confident, investors trust you, and you keep the economics and governance you need to build. Use soft openers that keep the door open while anchoring your position. Try, "We appreciate the offer, however." This acknowledges effort, then sets a boundary. To move forward, we'd need frames your terms as the path to progress, not a roadblock. From our board's perspective, adds authority and shows you're accountable to governance, not whims. Given market comparables, moves the discussion to data, not ego. Pair each opener with specifics, numbers, clauses, or timeframes. You'll sound cooperative and still communicate a firm, professional stance. Be exact with economics. Our floor is $X pre-money. Anchors the minimum valuation, no ambiguity. This discount is outside our range. Works for notes or safes. Push back on discounts that over-dilute. We propose a $X cap or remove the cap. Offer a clear alternative if the cap is too low. Let's tie milestones to objective metrics. For earnouts or tranches, link releases to revenue, ARR, or shipped features, not subjective approval. Provide a short rationale, runway needs, hiring plan, or current traction. Specifics reduce friction and speed decisions. Protect decision-making without sounding defensive. One board seat for lead, one for common. Keeps balanced oversight while preserving founder voice. We can accept one protective veto, not a list. Limit vetoes to truly existential matters, like a sale or new share class. Information rights, quarterly plus annual, no monthly. You'll share useful data without turning reporting into a second job. Pro rata yes, super pro rata no. Allow fair participation without future cap table squeeze. State each point calmly, explain the operational impact, and suggest a clean, standard alternative. Clarity here prevents painful surprises later. 1x non-participating is market, 2x isn't. Ensures investors get their money back once, not multiples. Participating preferred is a concern. Propose non-part. Avoid double dipping so common shareholders still see upside. Weighted average anti-dilution, not full ratchet. Protects investors from true down rounds without punishing future fundraising. No multiple liquidation stacks or seniority jumps. Keep a single clean preference layer to avoid misaligned incentives. When you label terms as market, you're appealing to norms, not emotions. Much easier to agree on. Speed and fairness build trust. Happy to grant 10 to 14 days exclusivity. Enough time for diligence without freezing other options. We can close in 30 days with standard docs. Sets a clear, confident schedule. Each party covers its own legal beyond a cap. Offer a reasonable cap for your side to avoid runaway bills. No breakup fees or open-ended expenses. Keeps pressure on both sides to act efficiently. Reinforce with process. Who drafts, which templates, and weekly check-ins. When timelines and costs are contained, momentum stays high and surprises stay low. Keep tone constructive while drawing lines. That's helpful context. Here's our constraint. Acknowledge, then state the boundary. We can meet you halfway by. Offer a specific, measurable middle ground. This point is a deal breaker for us. Use sparingly, only for true red lines like control or extreme economics. If X moves your way, Y must move ours. Link concessions to maintain balance. Pair these with reasons: team morale, hiring plan, or future rounds. Calm language, plus clear trade-offs, reduces friction and keeps negotiations moving. Be courteous and clearly define non-negotiables so no one guesses your limits. Reference market norms, data, and board guidance, not emotions or personal preferences. Trade, don't concede. Every give should earn a get to keep the deal balanced. Summarize in writing after each call to lock alignment on numbers, timelines, and owners. Next step. Draft a one-page term summary using today's phrases. Plug in your real metrics and send it as a follow-up. Clarity now saves weeks later and helps you land a fair, fast close.